Samir Arora is with us, founder and fund manager at Helios Capital. Samir is our market master of the day. Great to have you with us here, Samir. Thank you very much. Appreciate it. We're chatting after what seems like a while. So
we spoke after the budget and everything. So quite recent.
It's been feels like distant memory, and the market reaction after that, and all of the sort of crazy stuff. But the market's moved on, Samir, and it's looking stronger even without banks participating, right? So how are you?
The best comment I heard was from you just now saying, "Oh, HDFC Bank is at least not down today." Which is how sad it is that this is the situation. But yes, the market has done well.
Yeah. Go on. Sorry, please.
Yeah, I was saying that the FIIs are willing to buy anything if you offer them a 3% discount. But if you ask them to come into the market, they don't like it. So I don't understand. For example, yesterday was, that big block of Indigo, whatever, 10,000 crores. But the net FII flow was so much less. Maybe it was mutual funds. I don't know. Maybe it is just that the FIIs want to buy only blocks for some reason. But overall, it every day looks a bit much if I look at history, that so many placements, so many QIPs, so many IPOs can happen. In the past, that is in the 2000 era and the 2007, I used to always say that two entities, and please, these guys should not take it personally, but in those days I used to say that Inam and Kotak bring down the market because they did so many deals that in the end, the market used to not be able to handle it. Now it is beyond the size imagination that we ever had for our market. So far, so good, I would say. But always a bit nervous because of looking at history.
Yeah, no. So anecdotes is what makes the market also, right? Stories. And I was talking to somebody yesterday, Samir, an old-time investor, and he was saying that nowadays, and it struck me, he said, nowadays when we speak to other investors, nobody's asking, what are you holding or what are you buying? Because earlier it used to be,
they have their own
curiosity. Everybody is just focused on their list and everything is done well. That has gone up 2x, this has gone up 3x, this has gone up 4x. So, but it's all gone up.
Correct. But, I was reading, because now if the old guys like me say that the market is a bit hyped or that the SMEs are, the speculation we have not seen, the public, at least, because now, unlike the previous episodes, you get feedback from the market, from the public because of Twitter and other social media. They say, oh, these big fund managers are jealous of small guys making money in SME. So on behalf of all the fund managers, let me tell you, we are not jealous of somebody making money in SME because that's a different game. It's like saying, oh, I am jealous because yesterday Amazon stock went up 5% and Mr. Jeff Bezos made $2 billion. Sorry, you're not jealous. You're only jealous of each other in the same category. This SME is a different speculative group within intra-retail, but I would say you are not making money. The other retailer is losing. So collectively, it's a game within the retail. You can keep thinking you're making money. Collectively, you're not. But I would still say it is a bit too much. Some of this hype is too much. Look at this IPO. Forget about this recent IPO, which whatever is happening
now. The Yamaha showroom one.
No. I'm talking about the big IPOs now, this Premier or whatever. It's a good company, agreed, let's say, and you buy it. Who's supposed to buy it on day one? I have not understood. What is he supposed to think when he buys it? Okay, today it's okay. But in theory, it has to open up, I don't know, some 50, 60, 80%. Otherwise, this 200, 2000, whatever number times oversubscription would itself be losing money. But conceptually, who buys it that day? And what is his game in buying it that day? That also has to be resolved a little bit when a guy is buying an IPO, that what will happen on day one if it goes up X%? Why should the next guy buy it? Of course, somebody will buy it, because there is this tendency on day one of an IPO for some large guy to think that this is the only day he can get a float, so he can clean out the float because this is a mid-cap company. So if collectively we buy $800 million and $1 billion, all of us, because the float is so much, then let me tell you, I had a bet with one guy, who's still my friend, in 2000, who told me that it is guaranteed that Wipro can never fall. Because he said the float is this much. It was only some 15% float in those days. The market cap is this much, but the float is only this much. And this is the amount of money that comes in. So its index weight is higher because in those days there was no free float. So it can never fall. Then another group presented to me in 2007 how in DLF the IPO is over 10. I mean, the market cap is 10 billion. You totally need 1 billion. These are the big guys. These are the guys who will never sell because these guys got it in anchor or whatever. So these guys are long-term holders. So the float is only 350 million. So 350 million is so many days. So it can never fall. We have seen all this. Now, again, currently we can say it's not happening. So people can say the old guys don't know anything. But little bit of nervousness should be there. It doesn't mean anything. We are also fully invested. It's just that you have to know all these things a little bit.
No, yeah, nervousness or a sense of wonder. And again, on that point of foreigners, I mean, so as you said, they're happy to buy 5% discount, but they don't want to buy. That's what you began by saying. Why. Yeah, I mean, but so usually, I mean, look, markets, if they stay higher and they keep going higher, it can paper over a lot of stuff, right? I mean, you start to believe that actually, and maybe things are good, but you start to believe they're really good. And that's natural.
So I think the only thing we can all do, because we are also bullish about the market and we don't want to give up. But all you do is stay away from the obvious things, I would think. Obvious bad thing or obvious hype or 100 P or, things which are so far into the future or the same thing being repeated again and again. By the way, as a result of all that, over the last 2 months, actually, we've gone back into IT because it still looks okay. We know the companies and there is some turn. And you can also sense it from the fact that suddenly all these guys want to do analyst days or analyst meets. So, if a guy wants to do an analyst meet right now, he has some positive spin to give or some positive episodes, incidents, stories, orders. So the point is just stay away from the obvious bad. Forget about things which you think are not bad and turn out to be bad as part of life. I think that is the only thing I can do myself, and that is what we are doing.
That's good advice, and you're on point on IT, right, Samir? The index has done so well. Individual stocks have done even better. I mean, it's been the poster boy of August, actually, through all the roller coaster.
Month and a half. Yes,
absolutely. Yes. It's been IT's month. And I'm glad you came back to this because I was just thinking the last couple of times we've had you on, from politics to elections to budget and taxation, we've discussed so much in economy. Let's get down to brass tacks in terms of what you're doing in the portfolio. So you've already given us sort of one clue here that you've gone back and put some in IT. What else? But I don't know if you participated in Ola, for instance.
No, not what else. Because, depending on what you call IT. For example, I used to own this KPIT and all. But I don't call it even IT in the sense that it doesn't move with these 4 or 5 big moves. It's a different company. That way you can also business. We also own this small company, Indigene. Now it's IT, but I'm saying it doesn't move with the IT crowd. So if you call all of them, then we are now some 15% weight. But if you call these regular old IT gang, the TCS, Infeed, HCL Tech types, then maybe we are 9.5%, 10%. So please understand, to move 10, 15% of the portfolio or 10% of the portfolio is all you can do in a month, 2 months. You can't say, no, what else have you done? Because
no, fair.
Selling something, buying something kind of thing.
No, fair, absolutely. And I like how you call them, the old IT gang versus the newer businesses and more niche businesses. But okay,
which are called IT, but they don't move with the
old IT gang. No, absolutely. I got that. But while you've made this tilt in the portfolio towards IT and the newer age IT, let's call it newer age, technology, what have you pruned down on? Or is this just incremental money you're putting in there? Or what are you selling down or getting away from or taking profits from?
Incremental money won't do it in the sense we're talking about the full weightage changing. So it means you have to move it with everything. So basically what has got pruned down, as I said, was the capital good PSU type stocks, because I think that there was a bit of a post-budget. You needed more, according to me. Of course, the stocks have still done well, but broadly you needed more stories, more conviction on that, and more stressing on that from the government. And to me, it looks now that the government is moving the capex on the account of the individual PSUs rather than doing on account of the government. So when the government is doing it, then some companies are getting the orders, is okay. But if BPCL or HPCL or Coal India or somebody is saying that we will invest $6 billion or we will invest $10 billion, according to me, the guys who are spending the capex and spend it over 3-4 years, I don't call them beneficiaries of capex. They are the guys who will have to then, and mostly they are doing it in somewhat unrelated areas. I mean, unrelated means somebody is doing in petrochemical, somebody is doing here, things which are long term, and then you prove yourself in that project 5 years later. Normally, we buy companies where the capex is coming to an end, so that you can say that, okay, now the drag of this blocked capital is over, and numbers will improve, financial returns will improve. So when you are starting a 6 billion, 8 billion capex, I am not into those kind of stocks.
So you mentioned you sort of climbed down a bit on capex. So that means no railway, no defense, and you also mentioned you're staying away from 100 PE stocks. And then I'm trying to marry both the ABB and Siemens of the world.
Actually, those, unfortunately, I never had.
You never had, yeah.
No. So railway, we don't have now. And we can see the change in the priorities of the government in terms of, even changing the money where it is being spent, instead of being spent on these big air-conditioned Vande Bharat type trains, to newer, more basic trains, or maybe more on safety equipment or whatever else. But these are the things which change what you were buying and then what happens. For example, there was this company saying that we didn't have it, but I'm just giving as an example that I will get orders of air conditioning of all these coaches. And now you say we don't want air conditioned coaches, we want basic coaches, because otherwise the public is getting upset that all these trains are very expensive or whatever. So these changes happen, but now they are happening. One is general, we say that, this risk is always there of change in policies and all. It's not so much change in policy. It is maybe realization that these marquee projects are good, but you have to first do some basic things right in terms of security, safety, whatever. So for whatever reason, post-budget, we changed that. And with that money, you can say on the margin, we have moved it into ITS.
All right. Hi, Samir. Good morning. What about defense? Though the headline index
defense,
is
actually, most of my guys have sold, but I didn't sell because I'm telling everybody, in my hedge fund, I do massive call writing on this. The premiums are so juicy that I feel like, okay, I can drag it for a few months, but basically I'm willing to let them go if somebody was to hit my prices. But there, what I'm doing is I'm basically writing very massive. You get 6, 8. I mean, not 6, 8. You get 5, 6% in a month, 4% in a month. It's crazy. But in my mind, I have switched off from that. Yes, I don't want them. But technically, I have them. The others don't have them.
Got it. Samir, so 2-3 other areas I wanted your thoughts on. Zepto. By the way, we have an interview with the Zepto founders.
The two guys. Okay.
Yeah, we're gonna play. Our colleague Shireen interviewed them, and we're gonna play out sound bites through the course of the day. A lot of interest around this. Quick commerce, actually, right? But there's interest from investors, but also interest from other players. Big Basket, for example, is going full quick commerce.
Everybody will come in. Flipkart will come in. Everybody will come in. Yeah. So that is a bit of an issue for my company. But because the difference between this and, let's say, the paint industry, because we actually discussed it in our meeting, that in the paint industry, we realized 1 year ago that this big fellow is coming and there'll be new production and new marketing and new brand, or money will be spent. Here, the only difference is that you're coming into an area where the overall GMV of the industry is so small that the whole thing is still growing. So in a thing which has just started, and I think it's some 4-5 billion is the total, this thing out of the retail overall, and you are basically doing it in 7-8 cities, although technically I think Zomato is in some 20 cities or whatever, Blinkit. So we thought it's a bit early, and also these guys will have to prove themselves. We have also seen in the past that the guy who first, and if he's doing well, continues to do well, unless the market size becomes an issue, which is what we thought in the paint industry, which seems to have worked out a little bit. So we are staying there and we are not going to do anything. Also, please ask the Zepto guys, or maybe solve them into already over, that they should talk about size of business. One fellow out of those two always talks about market cap of the company that he's trying to create. Again, the old guys would say, you don't create the market cap, you create your revenue and profit and service or whatever. Big picture advice, free advice to anybody who I come across.
And I'm sure they're listening. Samir, just...
Because they always say that. I know they always say that. We are creating a 50 billion company, 20 billion company. I mean, it's okay. It's young guys.
Aspirational.
Okay. And they've done well, so no question about it.
Of course, of course. Just a quick word. All these, how should retail watch all these big IPOs? Ola, for example, has been I think, surprise to many who participated, did not participate. Even institutional guys who got in early, they were also surprised by the sharp run-up. That is one. We got Hyundai coming. We've got this. Yesterday there was a report saying LG from Korea is coming, and
everybody
you hear a lot of
will
this.
come. I think Google will come next. They are only 30p there. They should come here and trade at 100p.
No, so that is the point. But when you say in Korea, for example, Hyundai is trading
5p.
at 5p, and here you'll get 40. But you're buying you're not buying the Korean Hyundai business, right? You're buying the India business. In that sense.
Yeah, but that's okay. But so what the other thing that was done by the Indian companies is that you go to Africa and buy an African asset and you list it in India, which has happened in our consumer sector, or you buy Moroccan orders, or you buy a business happening in the paint industry in Middle East or somewhere, and it is listed in India at 70p. If you look at that, that part of the revenue, if it was there, it would be trading at 8p. So all that is part and parcel of a bull run. I am only saying to everybody, including to us, participate in the IPO. You will not get a lot. But on day one, who's supposed to buy on day one?
Yeah.
In theory, if it goes up, obviously in theory, because it's oversubscribed a lot, so in theory it's going up some X%, which is 30, 40, whatever, 50%. Then at 50% up, who are the guys buying? And please, you guys do this. Nigel should do this. Analyze the IPOs, not from the listing, not from the offer price, but from the first day listing or even the first day closing price. Because then is a genuine this thing that what happens after that. Then you will see that the returns are not very high. So in theory, we can, I think, I don't know exactly, but informally, if you say that from that day, the returns are very normal, then your exit is threatened. That means the guy who's buying in the IPO.
Yeah. All right. Yeah. I think couple of. I'll work on that, Samir, and a couple of instances that come to mind. Idea for Tata Technology. Tata Tech.
Yeah.
Yes, it's not moved at all from there. Since we're talking about IPOs, very quick.
It's down 20%.
It's down. Right. I think 1,300 or so, and I think the deal happened last week or so. But before we let you go, Samir, Ola, we have briefly mentioned that. Did you participate?
No, I didn't participate because we have to hire some 18-year-old guys in our company. We only have some 30-year-old guys so far.
No, and in fact, that created quite a buzz. When you all put that out on Twitter, people were saying, not asking what Samir has bought. It was like, what about that CV? Can you reach it to them? So 1-2 CVs I sent to them. Sure, I should have a look at it. Let's see.
Okay, all the 18-year-old guys we'll interview first.
So while as you get the 18-year-old brigade in, just to round this off, Zomato, would you be a buyer now? There's Swiggy coming because you're very bullish on quick commerce. Everybody's getting in. But again, the price, the valuation.
I don't know about Swiggy, but I don't think that their, what is it called, Instamart or whatever, is as good as Blinkit. I must tell you, I'm right now in
It's
Dubai.
Fabulous. I'm a user, huh?
Last week I was in Delhi, and at 6 a.m. we ordered a clothes wire for drying clothes on Blinkit. 6 a.m. at 6:10, 6:09, the fellow was there. Crazy. It's absolutely crazy. But it's an early stage. Therefore, I think we can all hope that, the industry or the segment does well.
There is a longer sort of runway. You can order, you can shoot a printout and they'll get you that one printout.
Correct. I haven't tried this, really?
Tried. $7.
Everything. And they can get absolutely everything. Even when you're traveling overseas, you want to collect extra
I got all kinds of puja stuff, including aam ki lakdi for a recent puja in the house. It was phenomenal.
And by the way, for Swiggy guys, the it's coming at $10 billion. Pre-IPO, the private thing has started. So they're selling it saying 30-40% discount to Zomato.
Yeah.
So, Samir, great
But that much
chat.
discount should be there. That much discount should be there for unlisted to listed. Because otherwise, how will your issue get oversubscribed 20, 30, 40 times? Which means you're supposed to make 30% on day one for whoever. Thank you very much.
Thank you very much.
Thank you. Great talking to you.
And lovely chat and lovely stories and anecdotes. Thank you for joining us.